Sameer, we put that together, your notes on a graphic for our viewers here, the three key themes into next year. Any specific one of the three, vaccine rollout, inflows, and central bank behavior, you want to start off with? I'll let you pick.
No, I think all three are going to be very critical. I think we could have different parts of the year in which one or the other becomes more dominant. I think we are going into the next year, obviously, with vaccines as a very key part of our thought process. I think it will define the fact that anybody, for example, in Asia, who's got a bigger beta to sort of this vaccine rollout in terms of, reflation in global demand is actually going to do well. I think that's a lot of these manufacturing and trade-oriented economies. But I think at some stage it will be interesting to see that rotate away into maybe ones where, as the vaccine rollout becomes wider, that it's the travel and tourism-related economies which do well. Of course, there are places like Singapore, which in some sense straddle both of that, which is a big beta to global reflation and a big exposure to travel and tourism economy, and that could actually benefit well in both of those stages. Flows, to our point, is a very big departure point. I think emerging markets have missed out on that capital, if you might, flowing across borders. But it's time, we feel, in 21 that the global capital will find more faith in coming into emerging market assets, and which makes us very positive on the asset class. And of course, what ends up actually differentiating between economies in the region, we suspect, or at least for currencies, will very importantly be central banks. Where do they resist more versus where are they a little bit more permissive? So, for example, we think places like China or Korea and Malaysia, etc., will be a lot more accommodative towards allowing these appreciation gains. Maybe some of the others are a little bit less so.
Okay, build on that then. I'm looking at some of your calls. You're owning Yuan, Chinese, yes, South Korean won, and the Singapore dollar. What are your targets for those three against the US dollar next year?
So we think, look, our basic backdrop is for the dollar generally to be weaker across everywhere, in G10 as well. But in that backdrop, we think Yuan gets to about 620. We think Korea gets to 1050. We think Singapore dollar gets to about 128. And probably a lot of these, we suspect, are going to be very front-loaded, so come probably within the first sort of 6 months of the year.
Sameer, you talk about inflows, and we're seeing a lot of that into China. We had, of course, Citi coming out to say that it sees the yuan at 6 versus the US dollar. You see it at 6.3. The thing is, BlackRock has come out to say that it is beginning to differentiate China versus other EMs. Are the differences extreme enough for us to do that?
Well, to be fair, I think China this year has already differentiated itself on various respects, and particularly when it comes to portfolio flows. So unlike most of other emerging markets, which were really short in terms of getting money, capital kind of flowing into their assets, China has had record money going into particularly its local bond markets. Now, part of that, we know, of course, is because its inclusion in various global indices, a story which will continue in 21, and which is why we remain very positive on that dynamic flowing through. But it's also the rest which will kind of catch back up, if you might normalize, as we think to money coming back. If you look at, for example, somewhere like 2017, which was the last year when we had a combination of good global growth and a weaker dollar, which remains very critical for money going into emerging markets, we feel that it could be equivalent to anywhere between 10 to 15% of assets under management worth of flows going into dedicated EM funds. That's a fair bit of chunky bit of money going into both debt and equity markets in EM. I think China continues with that narrative, but if you might, it's the rest which also try and catch up in terms of some of that money coming in.
We're wondering, what will the PBOC do if, when the yuan gets to 6? I mean, so far, nothing. It seems comfortable enough. But if there's a pushback, that brings us to our question of today. How do you see that impacting assets in general?
So, look, I think 2 points I will make there. One, I would argue the policymakers in China are going to be a lot more accommodative towards gains in the renminbi. And I think that's partly because a big part of their agenda is now internationalizing the currency, getting the currency to be more used both for trade purposes, but also capital market purposes. And having a stable currency, a flexible currency, and even an appreciating currency goes a long way in trying to encourage more people to use the currency. A second part, though, and more to your point, that if they do indeed, over the course of the year, start feeling a little bit more uncomfortable with how the currencies or how fast the currency is moving, then I would also say that they would use this opportunity to, if you might get to the next stage of the capital markets opening up, which is actually allowing more of Chinese domestic money to diversify overseas. I mean, remember, there's a lot of asset management money locally in China, which has yet not diversified into global capital. And I think that will be a nice counterbalance to try and maybe balance the supply demand a little bit better in terms of sort of especially foreign exchange flows, as more of the domestic money also is allowed to seek returns offshore.
Offshore, Sameer, global news has been, I would say, the better part of the last half decade. To some extent, we've been obsessed over Brexit, and the process obviously has lasted to this week. I want to play a soundbite from David Bloom. We spoke to him earlier on what he thinks, what the conversation now should be around sterling. Have a listen, and we'll talk about it right after. Play it, guys.
Sure.
The sex of violence is back in sterling. I mean, it's very interesting for the day traders going up and down, moving a lot. But I don't think it's fully priced in. I don't even think a deal is fully priced in. I mean, a deal, the tomes, the literature behind it, what's in it, nobody even cares what's in it anymore.
Yeah, so Sameer, in case you missed that first bit, because it played out quite quickly, he says sex and violence have played back into sterling. The question is, should we still care?
Yeah, well, look, I mean, the Brexit news flow, like you said, has been so choppy that I think a lot of people have sort of finally figured that there's not much point kind of keeping faith one way or the other till we actually see an outcome. Look, on the margin, we still think a deal is more likely than not, but clearly the news flow around it has really kind of got us to the wires and see. But what I would say, though, that if you look beyond that hump on Brexit, and without necessarily going into when and how that plays itself through, but beyond that, I think one needs to also recognize, which people don't often appreciate, that UK stands in probably one of the best positions to be able to get to herd immunity as the vaccine actually rolls out. So if they can get the Brexit deal done, like I said, we think on the margin that's still more likely than not, then early part of 21 could still get sort of much better gains in. So combined with a weaker dollar, we think that could still mean, it's not really in the price on sterling.